that are not relevant. Um, so yeah, I dropped in chat. I don't know if it's still visible. The link to this, if you want to participate, please feel free. We'll be going live here any minute. Currently showing me as like the only person in here, so hopefully some of my cohorts join here shortly. Otherwise, this is going to be real interesting. Let's see here. I feel like I should do something else. Hey, there's Tanya. Excellent. Hey, Tanya. I am. Oh, I mean, nothing in particular. The client that was taking up all of my hours has reduced their needs. So, I mean, ultimately, that's the goal of any good contract developer is to make themselves obsolete, right? Yeah. So I'm just oh my gosh, it is so nerve-wracking. Should we go live? Alright. And all right. And just so all y'all are aware, I'm doing a little experiment. I'm simulcasting this to my Twitch stream and YouTube channel. So we'll see how that goes, and if it works, then I'll keep doing it. But pointing everybody back here for participation. We were just talking about something very similar. Yeah, I had COVID. It was exciting. um, I don't know. It was somewhere in between. Really hard to describe because um, I had a lot of flu symptoms, but they were relatively mild flu symptoms. But I was basically stuck in bed. Anything like that, in how much it took out of me. Feeling much more brain fog is. There's been flus where I sat there and worked. There is not any chance of that. I had to sit in bed and yeah, thanks. And how about yourself? How did you spend last Thursday or last? Right. Yeah.
earn a stake or interest or something else. Um, Someone who brought it up a while back said, how do we keep this from happening without um, governing bodies like the SEC stepping in?
Hmm.
And granted, crypto assets can't really back other crypto assets, but I think in that scenario, because just to expand, with Phantom and FTX, we saw them giving considerable portions of their own coin over to Alameda Research.
Hmm.
And that wasn't documented publicly, right? People couldn't
Right.
actually track that. And that's where, in my mind, the risk comes from. So I think if, when we see more relationships like this come up, I would want to see something like a balance sheet that indicates this much of this crypto on the blockchain is allocated toward this other entity, something like that.
Yeah. Yeah, like you should have been able to see a transaction of some sort being
Hmm.
placed in a wallet belonging to Alameda, right? Like something like that,
Exactly.
as
Yeah,
opposed to being this mega wallet. Yeah.
and that's actually something very similar that I was talking about with um, developer friends yesterday, and it's like what is one of the things that is really missing that could be built by the developer community that we're seeing here. I think the tricky thing with entities like FTX is that it really is a combination Web 2 Web 3, right? Like they have a whole Web 2 infrastructure that was running a lot of the traditional database backend. Like you don't really know the numbers on their website, how whichever they actually choose to display, how does that justify to what's in their wallets? And their wallets actually see this with kinds of companies. People did like the kind of like um, after action review, what happened. They were looking at the wallets, so it's like the wallets exist, right? Can audit the wallets if they make them publicly available, but they don't have to. Numbers on their website don't have to reflect that, and get to that data requires basically degree, you know, data analytics, being a data scientist, um, which is hard. And I think that there is a lot of opportunity for third party tools, things like that, to make that more reliable and easier to access. I mean, I even remember recent history and past history DAOs that I've worked for. A lot of the big asks from stakeholders was just more accountability on what was happening with funds. Not that anything bad happening, it's so much work to aggregate that data that organizations don't do it. So making that making the bar lower for what it takes to access that data, both from an organizational level of if I wanted to implement good um, transparency practices, how do I do that? And from a user perspective of how do I choose what to trust? And I think that can be built. Um, but ultimately, it's crazy something like FTX they did. Um, Organization trust and big, in theory, trustable brand dissolved overnight, and watch kind
The true meaning of incredible, right?
Yeah.
Credible meaning believable. So
Yeah.
incredible meaning
yeah.
unbelievable. Like, yeah,
Yeah, if you told anybody a week before, would they have, it's like, no way, there's no way that
You're
could
crazy.
happen. This is
Yes, you're
FTX we're
crazy.
talking about.
exactly, exactly. And if you look at it, I believe the saga started on technically November 2nd, but then the actual, let's say, public Twitter unraveling started around November the 6th. And then I think by the 13th, 12th, somewhere in there, um, the value of FTX was almost zero. 1 week.
Yeah.
Man.
So, and again, for my understanding, I guess, and maybe these are all stupid questions, but is the reason why, because again, like we talk about crypto, and crypto is supposed to be transparent, and that is the beauty of Web3, that you should be able to fight these type of, thefts and scamming, because you should be able to track where all these tokens are going. So was the issue with FTX slash Alameda is that they were sharing wallets, so there were no actual transactions or transfers of tokens between the two? Is that why nobody could see it?
I'm not deeply familiar with it, but because it was a centralized exchange, and if you let me pause right there. Let's talk about centralized exchanges.
Yes.
If you use Binance, okay, trading your BUSD or your BNB over for Bitcoin or Ether, there's no wallet. There's no pop-up
Right.
confirmation that says execute this transaction. And so what you're really seeing there is they're just shifting data inside a Web2 database.
Right.
And
And
so
that's
same
the
kind of
problem.
thing, right?
That's the problem.
Yeah. And so that's where I see most of it coming from. Um, in my, let's say, personal preferences, I like to pick on Immutable X because I'm like 90% sure this is just a MySQL or a Postgres database that is presented as a blockchain. And
Hmm.
so if you think about it, if it's at least public and we can review it, right? Follow the truth instead of trusting. I think that's good enough.
Hmm. Hmm.
But I don't think that was actually available for Phantom, right? I think they were basically saying, here's all this money people are trading. Um, the numbers look right, so everything is fine. But yeah, if someone was able to get to, let's say, the actual ledger portion of that, they'd be able to say, wow, look at this giant pool over here in this other account.
Yeah.
Yeah,
Yeah.
and I think that that's like what is Web 2. Talked about this before, but I think that especially in the context of this, it's trust versus trustless. It
Mm,
is, data that is on the public ledger versus data that behind the scenes, could be modified at whim. And I think that's the thing with X is we're interacting with a trust system versus trustless system. So many reasons for that. Like, there are a lot of things that just don't make sense or are too cost prohibitive to run the blockchain. Have to have that. Um, but the other side of things, trustless system, the pure or more pure Web3, let's say it's just a web front end that is interacting with it. There, even in those trustless situations, I've seen over again is people using game theory to figure out how to game the contract into, even in the
Hmm.
mm,
trustless system, have something that on the surface works exactly the way it's supposed to. There's still potentially collapse those by playing a game with it.
Well, I mean, that was the whole Terra collapse, right? I mean, they were essentially they broke the algorithm, right? There was
Yeah,
a there was one way to break the algorithm, and they did it, right?
yep. And Mango
Mhm.
too, where they gamed Oracle be able to, yeah, sell at a much higher price than they buy a low massive amount of value, extract all of the value basically, a lot of times you have these tokens, and this is actually something that is really interesting about what we're talking at the very beginning of the conversation, the regulation side of things, and some of the there and second, but that that token only has value in relation to their asset they're holding. So let's say the Olympus model was like their reserves was what gave their token value. If you take away those reserves, you can leave people holding the token and then worth anything. Same thing that happened with Mango, basically traded all of their Mango tokens for more of the reserves than what they had, thus leaving everyone holding Mango tokens who thought they had some value with something that value. Segue is regulations that we're looking at as a after effect of FTX in particular, or coming down the pipeline, would be a centralized dollar back coins, regulated stable coin, guarantee value. The really interesting thing there is what Chris was talking about earlier is have you can only hold crypto that has value or crypto based, but if you have something that is a then in theory could create a one of these same systems that has struggled to what they promised. They lost the value it deserves. But you could, in theory, actually have centralized dollar backed coin reserves. Now, there's a lot of negative connotation. Idea of this, a lot of the crypto very negative, particularly around what people, what that centralized entity as far as taking it, all the things that they want to be able to from a government perspective coin, but the things that it enables also.
I
Yeah.
want to jump on that briefly. Binance, right? Um, actually had gotten hacked for I think 70 million about 3 weeks ago, maybe a month. And what did they do? They literally paused the entire blockchain. So what's interesting, um,
So it's centralized. Even the blockchain is centralized.
Well,
right?
sort of, because there was an interesting story behind that too, and that's that they reached out individually to the validator. Now they had a relationship
Hmm.
with their validators to the point where they could reach enough of them to be able to happen. Um, so semi-centralized, and they had enough influence, but technically,
Yeah.
Yep, yep. And so, the when we think about the government issuing a dollar-backed um, cryptocurrency, it raises that same question, right? Are they going to try and put it on their own chain that they manage and potentially manipulate? Is there going to be a bridge? And then who maintains that, right?
yeah.
Um,
So
all
are
these
they
little
actually
questions.
talking about a this digital currency that is actually going to be on a blockchain, or is it just digital currency? Like
Yeah, they're
Web
talking about
two?
they're actually planning, and I'll have to look up the details, but the announcement of the trial run of this real regulated centralized dollar back coin right after the whole FTX thing started to
Hmm.
found out what was happening in discussions around. It's been a lot of talk of actually big scheme push regulation forward faster, more of the community in possibility. How much of that's
Who knows? Yeah.
evidence and whatnot, but it does there are definitely correlations between that.
Well,
Definitely, what's the quote? Never fail to take.
I mean, there's probably 100 adage. Is it adages or adages?
I say adages, but I don't know if that's correct. We can say
Whichever
it
of
like
those,
a year for now, for
right?
fun.
Yeah,
Yeah.
to me it's a French word.
Yes.
But yeah, there's probably 100. We'll say cliches because I know how that's said. That apply here, right? Always leave them wanting more. Okay. Um, what? Keep your friends rich and your enemies rich, and wait to find out which is which. Um, and on and on and on. You know, it really makes me wonder how much of this could be sponsored by, I don't know, Visa,
Oh
MasterCard.
gosh, could you imagine? Oh
No,
man.
well, and you have to look at the people who have the most to lose here, and they're either going to get in the way and try and prevent or and
Hmm.
advantage of it. Seen there's been some amount trying to figure out how they are going to sell PayPal, and but it hasn't been at a broad scale.
Yeah. I just thought of one more. There's no such thing as bad publicity.
Yeah, yeah. I guess Elon Musk is the star of that.
You
He's
know
the
what though?
poster child.
Yeah. Uh, all that stuff with Twitter, right? All it does is just raise headlines. He
Oh,
doesn't lost anything.
of course not. We will see what happens there, but yeah, but see what this brings me back to. Okay, so I mean, is Web3 really becoming another Web2? And I think maybe stepping back and looking at that statement from a broader perspective, right? So what everybody criticizes about Web2 was that Web2 was supposed to be the internet for the people, right? It was supposed to, free up and the enterprise. It was supposed to, allow smaller companies, enterprises, individuals to benefit financially for whatever ways by being able to use this free tool in quotations. And as we know, it very quickly got gobbled up and controlled by a handful of corporations. You got the Googles, the Facebooks, uh, you know Twitter, I guess Twitter to some extent, and even the some will argue the internet providers, right, control much of content and what you could do, or Netflix and companies like
Mm,
that.
hmm.
So and really the regular population, I would argue, not only have they not benefited uh, financially, with some exceptions, or to a very small degree. Because I mean, you could always argue that, okay, Amazon enables hundreds and hundreds of individual businesses and small businesses to earn money by selling stuff and shipping stuff and all that kind of stuff. But when you look at how much those companies are making compared to what Amazon makes, right, is Amazon is in 5 stratospheres above, the profits of everybody else combined, right? So it's not really a equitable or even fair by any stretch of the imagination distribution of the income and what the internet is generating, right?
Hmm.
So I mean, in Canada, you could argue that Canadians are held hostage by the internet providers, like what we pay for internet service is it's insane, right? And there's
Hmm.
people who live in rural areas and areas outside of the big cities, and they can't even. It's not even affordable, right? Like that's insane, right? It's not acceptable, but that happens. So corporations took over Web 2. Now, Web 3, what I liked about Web 3, what I thought was really cool about Web 3 is, okay, finally, this really has the potential to truly decentralized and again, do a better distribution of, power, access, income distribution through the technology. But is it really going back to the way Web 2 was? Because, Bitcoin was supposed to be the poster child of decentralization, but very quickly, the mining powers are now in the hands of only the handful of mining conglomerates, really, that can afford to buy, the machines and the power that it takes to continue to mine Bitcoin. And that happened relatively early on, right? Where you can't be a person mining Bitcoin because you're not going to get anywhere. Like you're never going to be able to mine anything. So that, Bitcoin already, you could argue that is not, it doesn't do that. When you look at, all the other chains, they're going in similar ways, right? When you look at, who are the, looking at DeFi perhaps, because this part one was supposed to be just about DeFi. So then again, looking at DeFi, you know, can really an average person benefit or earn anything from decentralized finance? Like, do you have to be a FTX, a Binance, a whatever to be able to set up these large centralized exchanges to trade Bitcoin or any type of coin and provide these financial services? Like that's so that is, I guess, the first question is that is there any way for anybody who is not rich already to benefit from centralized finance?
I was kind of standing by to see if Corey would jump in first, but looks like I got the buzzer.
Go for it.
um, you know, I think it'll be the vendors. I think that'll be our first win for DeFi, because if you look at, oh, what's it called, Etsy, if you look at PayPal, if you look at Shopify, right,
Mhm.
most of the terms will say that their take is going to be like 3% plus 30 cents of your purchase price. And even in typical merchant scenarios, 7-Eleven, Target, whatever, Visa is putting them through the same thing, right?
Yeah.
If you're using debit instead of that, I forget what the other thing is called, then yeah, they are also skimming off of all of those transactions.
Hmm.
So
Hmm.
I think it'll enable a lot of vendors to come and be first class citizens in processing transactions, reducing that overhead, increasing liquidity, and I guess to some extent arbitrage as well, right? But that's capitalism, and so yeah, I think that's where I'm going to leave it.
Yeah, I mean, there are so many things, and I think that one of the biggest things when we look at regulation, especially in the US, that makes things like crypto as popular as it is, established investor rule thing, Tanya. You have to have this established slash amount of funds to be and participate a lot of investing. Higher tiers, it has higher payouts. There is so much justified all against regulations like that that people see as the rich preventing the non-rich from participating in the system that keeps rich rich. And crypto up until now, seeing people can do, and that doesn't exist, better and for worse, right? Like there are so many people who made money or would have. There are lost life savings wouldn't have
Yeah.
regulated areas. But not, I'm pivoting back to stay there, but talking about Web 2, Web 3, 2, I think that we're still working this whole idea of trustless architecture in
Hmm.
like what would it take to do a decent, like people talk about decentralized Twitter and relatively straightforward complex, but when you're talking about decentralized, not at the just the product product acquisition, you're talking about product transportation, distribution networks, the hosting
Yep.
site itself. Then let's talk about on hires how many years to develop these products for them. So utilizing and democratizing development platforms. And there's a lot of those things that like are not far off from similar tools provide better protocol file host that are getting us closer what we would that I think Uber being a web 2 company still has provided the structure we utilize ride share delivery, but um just so many of those pieces are close but need to before the structure is in place to actually really see the prompt possible, and then somebody has to actually start it right. Like first we have to figure out the development part. How do we
Yeah.
effectively like using things like developer DAO, how do we effectively shop out development work so that we can rest of it.
Yeah, I think you nailed part of it is that we don't have the tools yet to be able to truly build a proper Web3 so that it lives up to its expectations. Because I mean, everything that's been built so far, even with the best of intentions, like, there's always the bad actors who have all these resources who figure out the back ways to break it to make money, right? So until there's sufficient good actors working together to keep it from falling apart. It's going to be a while.
Yeah, and I think coming back to even what you're talking about, the people bought up Bitcoin farms, Bitcoin. I think that when you're looking at the decentralization, I think that the default thought is that it's every man, everybody can, everybody can. You can still spin up a Bitcoin miner on your machine at home. Are you gonna get anything meaningful for your output? No, not really.
No, it's going to cost you more in power than anything else.
But also the people who are running Bitcoin farms, we've seen it whenever like China dropped the hash rate, there was impacts to the network. We need that infrastructure. need people to run it. And I think the important piece is that, like the 51% attack, like that.
Mhm.
And if you're not familiar with the concept, basically, if you owned 51% proof of stake network, Ethereum, you could, in theory, control what that network produces as blocks as far as validating, become the source. And I think that the fact that that is possible is fortunate, large oversight. Like the network is big enough and robust enough. No reason, meaningful way in the code, nobody can own 51%. Like you just,
Yeah.
sorry, to make the network more secure, we're not going to happen.
Is it 33% of proof of stake? I thought 51 was proof of work
Maybe
networks.
might be right.
Yeah. So which when you think about it, right, 33% is not that hard.
I mean, yeah, it is
Really.
and it isn't, right? Like if you
Yeah.
look at the market cap, it's more than of us could afford. It could a government come in, buy $6 billion worth, or a third of that,
Yeah.
50 billion, if only $50 billion. Dropped more than that in just,
Elon can almost do it. He dropped almost that for Twitter.
and that's one of the things that, like, a lot of people were about as far as their influence
Yeah.
would do. And that's one of the reasons proof of stake networks, because we're
So how do we get back there? Like what, is it just a matter of waiting for tools? Like how do we, because what I see is, Web3, it's getting gobbled up by the big players, right? Um, DeFi is currently controlled by big players. How do we get back to it being more equitable or more accessible to smaller players? Is the only way to do it is waiting for tools to be developed?
I mean, develop tools. um, yeah, I mean that is developing the regulation. I think that I always like to use either be part of the conversation or you
Mhm.
can be, and so we can't just say no, which is what like they tried to do. They just, no, you can't. I'm not going to allow this. I'm like, well, too bad. The internet's going to do what the internet's going to do. So if they were part of the conversation instead of just no, a veto, what would it look like today? Uh, they definitely would have a whole lot more market share left. Like they could have a whole lot more favor. I think that's what we need to do as communities. Instead of just saying no, regulation's bad, that we say this regulation is going to be detrimental to for these reasons, and what can we do instead? Um, always wherever we can self-regulate,
Mm.
written into the code, standards that we set for um, standard protocols. Have a lot of things where we could say like this is an one, which means it is this these therefore should be should meet the requirements of self-regulation.
So I actually want to take that and zoom out a little bit because you really hit on something, right? Which was this concept of how do we enable that self-regulation to be more accessible? Um, I think avoiding keeping Web3 from becoming Web2 is actually a philosophical journey. And what's really interesting about this in web development, especially if you're doing APIs, we use this tool called Postman. Postman
Mhm.
helps you talk computer language to servers, right? And then receive that response before you actually integrate to it via code. Um, Somebody actually did a clone. And what's interesting, they did open source financing. And that doesn't mean they went and asked for investments from the general public. No, what they literally did is they said, I started work on this day. I released my product on this day, all these things. Here are my time expenses. Here are my physical expenses. Oh, look, this is a free product, but somebody bought support for $25. And so in month number one, we made $381, but we're going to pay this much in taxes. In month number two, we made $809 in revenue. And they literally published month to month to month to month to month um, the financial standing of their business. And it was just this one guy who built this thing and put it out there. And so it took 18 months, but he was making $37,000 in revenue each month. Um, Now, that in itself is not the point, right? The point is this idea that a company's finances must be private except for what they report to the government, right? Um, we have whistleblowers who say such and such a thing is happening, and then nobody can tell if they're lying or telling the truth or what. Um, just kind of playing the middle because they saw money move one way and they didn't see the inverse reaction, right?
Mhm.
Um, and so, yeah, making this world where I think people can become invested in the things they believe in, um, and supportive, and also I don't want to say legalistic, right? But being able to provide, let's say, a safety framework that benefits their peers as well, just because um, of this shift in philosophy, so that this information is available. Um, what's the website that one of the US presidents launched, and it just gives out like all the government information. Every government study just gets released there. Um, I'll have to go and look that up, right? But
Yeah,
but
I'm
that's
not
the point.
sure.
Is the government is trying to say, if you want to have oversight, go right ahead. We support that. And then I think I don't even know the right word. Um, I don't want to say pushing it out to the general public, right? But um, showing that it's a viable scenario and how they can participate at little to no cost.
Yeah. Yeah, I think the having information visible, the transparency aspect of Web3 is definitely something that we have to fight to protect, because I think that has definitely been lost. Yeah, mostly for the lack of tools and the inability of the system of the networks right now to be able to handle some of this stuff. I don't agree that everything has to be. I think there's scenarios and scenarios, right? Most, if you run a private company, I'm not sure, depending on what it is, but I'm not sure that, you have to require that everything that they do is public. Many companies will argue, because it's hard to tell what a company's, what their, um, how they compete, right? I forget what the term is, but with their advantage, right? And sometimes information is part of their advantage or knowledge or experience. And So so if experience is your advantage and you're being forced to print out or put out some of that experience publicly, then you're being it's detrimental, and in the end people are not going to work for that. So that's I think there has to be there's scenarios and scenarios, but I do believe that anything that uses public funds, for example, to me that definitely should be public. Like I would still love to see someday, especially charitable organizations, or like one of my biggest beefs is this. I'm a runner, so I've participated in tons of running fundraisers, right, where all the money goes to some hospital who supposedly then uses that money to develop a cure for whatever, but then that cure is sold for $1 billion and is not accessible to the public. But it's like, but wait a minute, that you got there with the money that regular people gave you. Like, why now do you get to profit from it,
Have
right?
Have you ever heard of like the envelope finance? Take money
Mm,
for whatever it is you're spending and budgets of business money. And the theory behind it is that you can see it. And when you can see it, you are more judicious with the way
Yes,
that that is a really good analogy for a lot of these. Like if you can see how the money is spent, you're going to have
exactly.
a lot of different questions and conversation and less assumptions about where it's going and how it's being used. And so, and a huge thing, Healthcare Act passed, right? Capping admin, the amount that a insurance company make per dollar to basically a per dollar spent. So like they could only make 10 cents, which is a lot, 10%. For every dollar that goes out, they could make that in profits. Right about that. Make $10. It's like should be the least amount of the money going out should be going to your admin costs, like
Mhm.
which raise a lot of questions, really good questions about why is expensive and a huge chunk of it. That was a matter of transparency. Created that conversation, regulation, forced transparency of some level. And yeah, I think that there's a lot that could gain by having all. And I think that making these tools available wants to hard
Yeah,
or
it's
Web
very.
three.
Do you think we're ever going to get a true decentralized bank? Because I have a big beef with the banks, right? Like
mhm.
I bank, I put, keep my money in a bank, or business finances are in a bank. And but like things like, for example, I they charge me fees for you
Mm.
know random things, and it's like, why are you charging me this fees when it doesn't cost you anything? Like, you're just charging me fees.
Well,
Well, it's funny.
go
You've
ahead.
probably heard. Um, some banks are switching to your ATM is free, but if you go through the drive and talk to a person, that's where you get charged,
But
right?
there is actually like, and it's been interesting at the of like how much in the numbers and Google widely huge amount what numbers aren't, but when you say free, that one and zero around, I mean, there is the infrastructure, there's the electrical cost of have a data. It costs them per transaction, not what their users dollars in bonuses alone.
But that's what I mean, right? Like, I mean, they make banks post, even in the worst of times, billions of dollars in profits, right? So the like and it does like for an example that would drive me crazy. We had a business line of credit, right? First of all, I have a personal line of credit and I have a business line of credit with the same bank. My personal line of credit, the interest rate is like half of what my business line of credit was. And I would argue it's like why the difference? And there was no reason, because the backing is from the same person, right? Because at the end of the day, I'm still the backer for my business, the same that I am the backer for my personal stuff. But just because it's a commercial account, they automatically jack the percentages, right? So that drives me insane, right? That shouldn't be, right? And then so we had this line of credit, and even if I wasn't using it, they would still charge me $100 a month in a fee just because I had a line of credit. Don't tell me that that costs them money to have an entry in a database that says, an X amount that I may be able to draw on. That doesn't cost them $100 a month. Come on. Like, so, and they do that times how many millions of customers? It's freaking insane.
And that is where I think decentralized systems working as intended distributes that equitably among hosting and processing. Doing is the fraction now, and it's not exactly for action, right? Why they're doing it, able to convert, power, but it's more in line with should come.
Yeah.
This is arbitrary. They're trying to come up with what is they want to have cost their product while still making profit, but they get to determine arbitrarily what that profit target is, and they're holding shareholders. That I think shifted, not necessarily miners' responsibility to their users, but ultimately funds.
And just briefly, you brought up a good point, right? Beholden to their users. With Lehman Brothers, Bear Stearns, all the stuff that happened in the 2008 um, financial crash or whatever that was, right?
Yeah.
um, and this is kind of going back to what I was trying to say before with that government data. If these corporations or some governing body was able to identify, yeah, this is safe and valuable information for our general public, then they should release that. Knowing when someone is over leveraged by, let's say, 40%, you know,
Yeah.
that's a valuable metric. Um, and I think some of that comes out in the SEC filings, but someone has to go through the trouble to, I guess, democratize that,
Yes.
which becomes quite a challenge. You have to be a financial expert. And then, did they do something weird? So when we look at Coinbase, they said, technically we have these assets. And, depending on the SEC's interpretation, um, by holding these assets, if we were to go through bankruptcy, we would have to liquidate them without your say so. Um,
Are they
and
all
so,
bored apes?
well, I'm getting a little bit off the topic, but a buddy asked me, he says, dude, we should sell fractional real estate. And I said, all right,
Well,
let's
I
talk
totally
about corporate
believe in
structure.
that. I think that's a magnificent use case for blockchain.
It is and it's not. at least
No
according to our
why?
current legal structures. Because if um, you have to have a deed or a title for that property, right? You can't just go out and say, all right,
Well, you can have
I'm now
multiple owners of a property.
right, but that makes you have to go through that process for every single one that you add. If you thought Ethereum fees were bad back in November, I mean, this is going to go crazy.
Yeah,
Um,
yeah, no, yeah, I agree that you need a different different type of token or something to do that. But well, we
so,
should build one. We should come up with a proposal. But that, like, to me, with I mean, at least I live in Toronto, and real
mhm,
estate is crazy.
right.
Like, my kids are never going to be able to afford a house, right?
Not in Toronto.
No. So the whole concept of allowing people to, again, benefit from real estate through owning partial properties, and there's been some stuff that's already happening
Mhm.
here, and there's been some experiments that are going on using blockchain and tokens. But I wasn't sure that it still entails having a company that owns the
Right,
real estate, and you
right.
own shares essentially, which is not the
Yeah, that's
same
the
thing.
quote unquote risk, right?
Yeah.
And so just to talk through that formula, what you're really saying is that this entity, regardless of whether it's a corporation or LLC or whatever, owns a property, and then on behalf of probably it's either its debtors or its shareholders, um, maintains that property, right?
Yeah.
Because the way a corporation gets liquidated during bankruptcy, your notes get paid out first.
Right.
And there's presumably that would, if you're doing it right, you would do a secured note. Unsecured notes go second, then preferred stock, then common stock.
Hmm.
Okay. And so what you're really saying is, even if you're not doing the notary to get everyone onto the title and everyone onto the deed, um, you would be issuing some type of note or stock for every person who joins in, so that that interest is preserved even if the company is not. So I don't think it's hard per se, but the way that people
Yeah.
are just saying, we have a DAO, you own part of this property, I think that's
Yeah.
wholly false.
Yes, no, I agree. But that would be like totally cool to do some, come up with a standard, ERC, blah, 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 call it whatever you want, where you could, like, if you could have people own fractions of properties without having to create this legal entity around it, that would be very awesome. And for it to be legally, recognized, right? That's the other part, right?
Yeah, and I
Laws
think
that,
that's the big part. Figuring out I I think that it's both one of the most straightforward and also one of the most complicated objectives to really achieve with. But first step is always like get a lawyer involved to figure out legally how do we. And I think that Chris brought up something that I wasn't even, because like it just another one of those things that requires some entity that is hand a lot of processing with
Mm,
county
mhm.
recorders and purchasing, taking in new properties system, and then you could maybe compare like some way of representing actually share and super interest. I have any bankruptcy processes important too. Like
Mhm.
how do we centralized and shareholders title added.
Hmm. Right.
So yeah, just again, how do we do this? What is the process for truly realized? Um, and we gig economy like of going through the title process. Like, all right, so we're trying to buy this house or buying this house off of this person to willing to pay however to whoever goes actually physically does this thing. Cool thing is that maybe even chain link or Oracle service completed, so payouts, all of these trustless way.
To me, it should be simple. It should be the house should be represented by an NFT that you can put on a marketplace somewhere. When you want to sell it, people should be able to bid on it in the same way that you bid on a freaking, Bored Ape or whatever. When it, and in the back, and they could be different contracts attached to it. If maybe the way to represent multiple ownership. So behind the house token, there's ownership. Maybe it's a multi-sig wallet or something that has who are the different owners of this house, and if they all sign off on the sale, there's a smart contract that takes that money and divides the money to the different owners of the multi-sig. It should automatically be able to pay whatever taxes there are and lawyer fees, whatever,
Well,
through
it's
smart
interesting.
contracts.
Would you
That's what
allow
to
quote
me.
unquote
It just should be like just
ride-alongs?
like that. Bada boom, bada bing.
Yeah. So what like if somebody is a partial owner in this, would you allow quote unquote ride-alongs? You know,
What's a
s-
ride along?
like um, I'm going to the bank either via, I don't know, FaceTime or Zoom or whatever. So and so gets to come along with me, um, or if we're in the same locality, right? Then
But it should be paid by wallet on the blockchain. It should go, so
right,
if
but
you're
it's
dealing
you're
with
just
a
talking
bank.
about the reaping the benefits. I'm saying participate in this democratization.
Hmm.
Be like, hey, such and such, as a partial owner of property XYZ, can you please book the notary that's going to deliver this stock? Um, I forget what, it's not a distribution, like allocation,
Hmm.
to our newest member, right?
Yeah.
Um, Something like that, so that it actually is in function and in form, um, decentralized, and so people can say, yeah, nobody's hoarding information. We always have the
Yeah.
three-party rule, separation of concerns, et cetera, et cetera.
Yeah. Yeah. I say it's buildable, but yeah, it's you got to get the right people in place, and it takes time and effort and money, obviously, to do this. And you got to get the again, I think that the biggest thing is for the legal system to recognize, for governments to recognize that as a viable way to sell your property, right? And then it comes to, again, just kind of to close, maybe like the biggest question is, can it ever truly be decentralized? Because what happens if you are say you implemented something like that, you have houses that are tokens, you can have multiple owners of this token, and you can have all this done through smart contracts, and some hacker figures out something that we didn't think about 5 years down the road, and they go and they steal a tons of houses through some hack, and then what?
Yeah, I lost
It's
I lost my
legally,
house bridging it over to Ethereum.
yeah, exactly, right? So, so I don't know. So that's, to some extent, there's always going to have to be some type of centralized way to undo, like an undo button of some sort, I think. But I think a lot of it can be done in a decentralized way.
I mean, I guess yeah, like we're minutes over
Yeah.
talk very brief. Um, Data sources. We've seen this in it, so I think that if we had a scenario government with basically putting data part of their official process, um, be in parallel to their standard records, however happen happy, but there will be people out there who are going to that network validate the transaction network that is a scenario where that would be possible. Technically, I could see publicly certain government, but you have to have a option house county by counties. You have to get
Oh
this
yeah, the
mass
nightmare.
county by county adoption process. I mean, it'd be huge, but I think that money to support it, like the would be there. I access like companies doing this.
Mhm.
I think the biggest part of it would be figuring out how to proper adoption on county level and making it. There are companies who are doing property, U.S. property, open sea right now,
Yeah,
um, but it's being handled largely
of course.
going to be the.
Chris, any last thoughts before we wrap up? And I mean, we'll continue this discussion next week, I think, as we kind of jumped off of DeFi a little bit, which was next week. It's supposed to be more about non-DeFi going into Web 2.
Well, I mean, I think we explored some really valuable topics here, right? Um, I know mostly developers, so I don't, as I say this, I'm shooting myself in the foot, but I wonder if, we can try and get a real estate agent or someone who can actually kind of talk through some of this stuff with us.
Yeah, that'd be
How
fun.
much risk is there in actually exposing your um, revenue documents? Because I know internally some companies do that directly to their employees, right? And then what is the probability of actually saying, we are going to create a trust or an LLC with members who are allotted shares or maybe even, notes of debt according to their investment. Um, which, yeah, what are the structures that would actually connect Web 2 to Web 3 in a meaningful way?
Well, let's dig through our networks and see if we can set something up for next week. I think that'd be a great discussion to have.
Awesome.
We can do like the discovery process on live on LinkedIn. See, true decentralized manner, open book.
Heck yeah.
Sounds good. All right, I am 10 minutes late for a meeting. Robin, thank you for joining us. I hope you can join us again next week. And everybody have a great week, and we'll be chatting in the background for sure.
Always.
Thank you.
Me
Yeah.
too.
Have a good week, guys.
Thank you guys. Yep. Talk to you later.
Alrighty. Bye now.
Bye.
All right. I'm gonna do it for me. Anyhow, um, so